Good evening, investors. Today, IT index fell almost by 2.95%. The reason we all know H1B visa announcement made by US President Donald Trump. So, in today's episode, first we will try to analyze the impact of this announcement on revenues and margins of different IT companies. Then, Infosys has also fallen by 2% today. So now, does Infosys buyback become an attractive opportunity now? We will discuss that as well. And towards the end, we will discuss other sectors and stocks which were in focus today. So let's begin. So for those who don't know what is H1B visa, so it is a type of visa which allows US employers to employ foreign workers. So if you are an Indian and planning to do job in US, you need H1B visa. Currently, US issues almost 85,000 H1B visa on a lottery basis. Now, why is it such a big news for India? The reason is almost 72.6% of H1B visas which are issued, they are issued to India. Now, why IT sector was down today? First, you need to understand their business model. Currently, IT companies deploy two types of business model. One is on-site and other is off-site. So, in an on-site business model, companies send their employees to the client location. On the other hand, in an off-site business model, project can be done from a remote location and employees are not required to travel to client premises. For some activities like project management, design, integration, on-site business model is preferred. For activities like coding, testing, maintenance, off-site model is preferred. Now, we are not required to understand in depth what are these activities. We are not technicians or we are not doing any IT course. We have to see it from an investing lens. For us, it is important to understand how much percentage of workforce is currently deployed for on-site business model and how much is for offshore. So currently for Indian IT companies, 20 to 40% workforce is deployed for on-site and 60 to 80% remaining is for offshore. Now for this 20 to 40%, either you can send Indians to those countries like US, Europe, or you can hire the local staff of US or Europe. Now again, I am repeating myself. 20 to 40% workforce employed on an on-site model. That doesn't mean that 40% of total your Indian employee strength will be going to US. It is not necessary. You can hire local staff of US or Europe also. So overall, it can be understood that impact of H1B visa will be higher on on-site business model compared to off-site business model. Now earlier the cost of H1B visa was around $5,000. Now this cost has been increased as per the latest announcement 20 times, that is $100,000. As we have discussed that 70% of the H1B visa holders are Indian nationals and almost 20 to 40% of workforce of Indian IT companies are working on an on-site business model. That's why you have noticed that Indian IT sector was completely down today. Now within IT sector, you also might have noted that mid IT companies like Infosys, LTIM, Coforge, Persisent, Cyient, they were dropped in the range of 3% to almost 5%. And if you compare them with your large cap IT company TCS, Infosys, Wipro, they were down in the range of 2 to 3%. Why? Because currently if you see this table, TCS, Infosys, Wipro, these large IT companies have less exposure of their revenue to US compared to Infosys, Coforge, Persistent, who have 70 to 80%. Now I understand that this news is very negative for our Indian IT companies, but the good part is that over the years, Indian companies have decreased their reliance on H1B visa. From this table, you can see that in FY 2015, top Indian IT companies have 15,100 approved H1B visas, whereas in 2025, it is almost 6,000. It has been dropped to more than half. Why? Because during this period, Indian companies have started to hire local forces of their countries rather than sending their own Indian employees. Now I understand some Indian talent is totally irreplaceable. You can't make this number to zero. But still, the good part is that data suggests that over the year, our dependency on H1B visa has been reduced, which is a good part for us. Also, today various mid-cap IT companies have come out with their notification and clarification regarding to this announcement. Emphasis have said that they don't foresee any significant impact on their financials. Persistent System also said that they have reviewed recent US regulations and they also project negligible impact on their earnings. Coforge, again the same thing. They also said that there is no major material impact on their financials, as we discussed that dependency on H1B visa is being reduced over the years by Indian IT companies. If you track news flow on weekend, then earlier the news was that this $100,000 fee was per year. But yesterday evening, they came out with the clarification that it is not per year, it is only one time. So per year would be a huge dent on their on-site business model, but one time, I believe, is totally manageable. Our Indian IT companies are very cash rich. They are sitting on piles of cash. Plus, over the year, they are reducing their dependencies on H1B visa. Plus, we got a positive clarification from the management side as well. So, I believe these negative sentiments will be absorbed by overall all the IT companies in most 2 to 3 trading session. Now, due to this H1B visa announcement, Infosys, being an IT stock, was 2.55% down today. And if the negative sentiments continue for next 1 to 2 trading session, then it is a very good time to study Infosys buyback opportunity. Now, for those who don't know what is a buyback, so buyback is an arrangement where company purchases its own shares from the shareholders. So few weeks back on 11 September 2025, Infosys has announced their buyback offer. So as per this offer, those who will be holding Infosys share, company will buy those shares from you at the rate of 1800 per share, and currently price of Infosys is 1500, so it look like a 300 per share gain. But no, it's not that simple. There are two important variables which you need to know. First one is acceptance ratio and second one is price after buyback. Suppose you buy 100 shares of Infosys. Now it is not necessary that company is going to buy all shares from you. In case of oversubscription, which definitely is going to be in this case, shares which will be accepted will be less. So suppose acceptance ratio has been decided basis the number of application received 30%. This means number of shares which will be bought by company will be 100 into 30%, that is 30. So for 30 shares you will get 1800 rupees per share. So only on those 30 shares you are going to make profit of 300 rupees per share. Remaining 70 shares you will be holding those shares at the price which will be after the buyback. Suppose in a hypothetical case price come down to say 1000. So you will end up making 500 rupees loss for 70 shares. So on 30 shares you will make a profit of 300 per share. That will be 300 into 30, which will be equals to 9000. And here you will make a loss of 500 rupees on 70 shares, that is 35,000. Overall you will make a loss of 26,000 if this variable doesn't work in your favor. Now you will say, Arpan, we understand both the concept, acceptance ratio and price after buyback. Just quickly jump to whether we should apply for buyback or not. That means whether we should buy Infosys share right now and then apply for buyback or not. So for that I have done some maths and calculated various scenarios where at what price and at what acceptance ratio this offer will look attractive. Now I have done some maths, and if you want to understand this maths in detail you can download this PPT, but in order to save time let's just quickly jump to the scenarios. Now one more important thing, if you buy Infosys share for the buyback purposes, then the gain on buyback will be treated as a short-term capital gain and you have to pay 20% tax. So in my math I have accounted for taxation as well. So here are different scenarios. For example, if say 15% shares are accepted, then as long as Infosys price stays above 1435 after buyback, you will be in profit. Similarly, if 30% is acceptance ratio and as long as Infosys price after buyback stays above 1396, you will be in profit. For 50%, break-even price is 1260, and for 100%, you are indifferent related to the post buyback price because your all shares will be bought at 1800 price. Now the next question is, which of these scenario is most likely? So currently it is being estimated by seeing the trend of other companies and looking at the size, around 15 to 30% can be the acceptance ratio. So the likely scenario will be any of these two. So in order for you to make profit, it is very important that after buyback, Infosys price should stay above this range, that is 1396 to 1435. And if we look at the Infosys price chart, then at 1400 level, Infosys has a very strong support. So chances of Infosys price to go beyond this level are low, but not impossible. So right now it is a good opportunity to study. Also a disclaimer, I am a SEBI registered research analyst, but this is not a recommendation to buy Infosys share and apply for buyback. Please take any action or anything after consulting your own financial advisor. I am just sharing for the purpose of, I won't say educational, but informational. Now the next question is, what is the last date for buying the shares so that you are eligible for buyback? So currently that date is not yet announced. So keep tracking Infosys on Screener or on Twitter or on BSE website. You will get to know the record date. Now coming to the sectors which were on focus today. IT, we all know, 2.95% down today. We discussed it earlier as well. This is my customized railway index which I have created on TradingView to track performance of railway sector. This was 1.57% down today, but this is a very sentimental sector. So and there was no specific news for railway, so it was just a profit booking in railway sector. Then coming to pharma, 1.41% down today. Again, there was no specific news for pharma sector, but what I believe is that whatever happened on weekend, investors don't want to increase or want to maintain their exposure in the sectors which have their revenue related to US. Although currently pharma is exempted from tariffs, but still investors don't want to take the risk and have booked some profits today. Otherwise, there is no negative news related to pharma today. I was not able to find. In case you know, then please do let me know in the comment section. In the coming section, I believe that pharma will again start to rise. I mean rise or can go sideways, but today 1.41% fall. There is no negative news which is currently in my radar. Now coming to the stocks which were in focus today, again Adani stocks were again totally fire today. However, today Adani power split has happened in the ratio of 2:1. That's why it is showing 76%. Otherwise, it was in upper circuit, and I guess it is also 20% up today. Adani total gas 19.85%, Adani green 11.78%, and other Adani stocks were also in green. The reason we know, we have discussed in our previous video as well, that that Adani group has received clean sheet from SEBI. Another group of stocks which were in good momentum today were data center. Although in my previous videos I have mentioned that I will make a video on data center on weekend, but for those who don't know, I currently work dedicatedly for a family office, so unfortunately I didn't get time to shoot a video for data center stocks, but I will try. Now I can't commit when, but this weekend I will start doing weekend researches and I will try to show all my research work as well. So please subscribe to my channel, and I will also try to make videos on sectors in depth that will be in focus. So coming back to data center, Anand Raj 5.86% up today. NetWeb Technologies, they provide supercomputers for the data centers, 7.78% today. Techno, they are also entering into data center. Their data center will be live by I guess Q3 of this year. Although during the day it was 2.2% up, closed at 0.98%. The reason, again, we have discussed in our earlier videos as well, that there is a draft policy which suggests that 20 years income tax will be exempted for data center companies. So that's it for today, investors. I will meet you tomorrow.